This episode is sponsored by 3M and PPG.
And I mean, we have a perfect transition in here. The different types of loans that we have. One of those would be a business line of credit.
Yeah.
So, a business line of credit is something that you'll borrow short term for maybe 12 months or somewhere in that range to fund your input costs. And then when you sell your product, you turn around and pay that back typically within a 12-month period. So, I mean, there's no downside to having a line of credit.
Right.
You're not paying interest on it unless you use it.
Yep.
So,
yeah, I always view like a line of credit as kind of like an insurance policy. That's like,
absolutely,
it's easier to get when you don't need it.
Uh-huh.
And usually when you need it and you don't have it is when it's really hard to get, right?
Exactly.
If you get in like a car accident, after that's not a good time to go then purchase car insurance, right? Like you kind of need it beforehand, before the accident. So, no, I think that's a really good point of view, because I think a line of credit is really something, again, for a lot of service businesses, contractors, anybody listening to this, that kind of falls in that range. Like just even having a line of credit at your bank with your commercial lender is a really good thing to have, because you never know when you may have a $20,000 check coming in that all of a sudden it was supposed to be in before your payroll.
Exactly.
And it's not. Right.
Yeah.
So
people need to get paid.
Exactly.
I don't
right.
think your employees aren't going to like that too much.
No, exactly. Yeah. So, okay. So line of credit's one type. Tell us about kind of the other two.
Yeah. So you've got, your intermediate borrowings. I would consider those, such as something along the lines of maybe purchasing a piece of equipment. So that's something that's probably going to be paid back within 5 to 7 years.
Okay.
I mean, depending on the cost of such, obviously if you're buying a $500,000 piece of equipment,
right,
swinging those payments over 5 years is going to be pretty hefty. So we can work with you on as far as stretching those payments out.
Okay.
And then lastly, which is kind of, the bread and butter of most banks, is lending on real estate. So, typically you can stretch a payment on that out over 20, 25 years, somewhere in that neighborhood.
Cool.
To watch the full episode, download Overdrive, now available on the App Store and Google Play.